Based on the provided historical and forecast data, Bitcoin appears to be in a sideways trend with a slight downward bias. The support price of $82,500 holds strong, while the resistance at $93,900 has been preventing significant upward movement. The RSI oscillates around the neutral level, suggesting a lack of strong momentum in either direction. The Bollinger Bands indicate a narrowing range, which could signal a potential breakout in either direction. Considering these factors, a strategy based on a potential breakout above the resistance level at $93,900 would be appropriate. A long position could be initiated at the breakout point with a stop-loss order placed at $82,500, close to the support level. The target price could be set at $101,800, which is the upper Bollinger Band value during the forecast period. This strategy capitalizes on the potential upward momentum if the price breaks above the resistance and utilizes the support level as a safety net. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping significantly from March 6 to March 19. The forecast data also suggests a continued downward trajectory, with prices predicted to remain below the recent highs. Considering this trend, a potential strategy could be to enter a short position when the price reaches the resistance level of $385. The stop-loss order should be placed at $397, the top of the Bollinger Bands, to limit potential losses. The target price could be set at $331, the support level and the lowest point in the recent price action. This strategy utilizes the downtrend, the support and resistance levels, and the Bollinger Bands to identify potential entry and exit points. Based on the provided historical and forecast data, Stacks appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce. However, the overall trend and the forecast price movement indicate a bearish outlook. A potential entry point for a short position could be around 0.625, with a stop-loss placed at 0.65 to limit potential losses. The target price could be set at 0.58, aligning with the forecast price and support levels. The Bollinger Bands show price action consistently trading below the middle band, further reinforcing the downtrend. Additionally, the RSI's potential for oversold bounce aligns with the Bollinger Band's potential for price to bounce off the lower band. This confluence of signals strengthens the case for a short position. It's important to note that this is a high-risk strategy, and traders should carefully consider their risk tolerance before entering any position. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with support around $1,880. The forecast data also suggests a continuation of this downtrend, with prices projected to remain below $2,000. Therefore, a bearish strategy is recommended. Enter a short position at $1,930, with a stop-loss order at $1,970 and a target price of $1,820. This strategy leverages the downtrend and the oversold RSI, which is currently at 36.8. Additionally, the price is approaching the lower Bollinger Band, suggesting a potential for further downward movement. Based on the provided data, XRP appears to be in a sideways trend with a slight downward bias. The historical price data shows a range between $2.03 and $2.54, with the support level consistently around $2.33. The forecast data suggests a continuation of this sideways movement with potential dips towards the support level. Therefore, a conservative strategy could involve waiting for a pullback towards the support level of $2.33. A buy order could be placed at $2.33 with a stop-loss order set at $2.29 to limit potential losses. The target price could be set at $2.45, aiming for a potential 5% gain. This strategy utilizes both the support level and the potential for a bounce back upwards. Based on the provided data, Binance Coin appears to be in an overall uptrend. The historical price data shows a consistent upward movement, with the price breaking above the resistance level of $630 on March 12 and continuing to climb. The forecast data also suggests continued upward momentum, with prices predicted to remain above $600 for the next week. Therefore, a bullish strategy is recommended. Enter a long position at the market price when the RSI crosses above 50, indicating potential buying pressure. Set a stop-loss order at $588, which represents the recent support level and minimizes potential losses. The target price should be set at $630, the previous resistance level, which represents a potential upside of 5%. This strategy utilizes the upward trend, RSI momentum, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the provided data, Stellar appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the price closing below the support level of 0.283 on multiple occasions. The forecast data also suggests a continuation of this downtrend, with prices expected to remain below 0.283 for the next week. Considering this, a short position strategy could be implemented. An entry price could be set at 0.275, with a stop-loss placed at 0.283 to limit potential losses. The target price could be set at 0.263, based on the forecast data and the recent price action. This strategy utilizes the downtrend and the RSI oversold levels to enter a short position. Based on the provided data, Toncoin appears to be in an upward trend. The historical price data shows a general upward movement, supported by the forecast prices, which also indicate continued growth. The RSI, while fluctuating, has been generally above the oversold level of 20, suggesting buying pressure. The Bollinger Bands, with the price consistently trading above the middle band, also point towards an upward trend. A long position can be initiated when the price breaks above the resistance level of $3.71. The entry price for this position would be $3.72. A stop-loss order should be placed at $3.48, the support level, to limit potential losses. The target price for this position is set at $3.81, based on the recent highs and the forecast price of $3.38 for the following week. Based on the provided data, Cardano appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast data suggests this trend may continue. The RSI is currently hovering around 48, indicating that the asset is not significantly oversold. However, the price is approaching the lower Bollinger Band, which suggests a potential bounce. A possible strategy would be to enter a long position at the support level of $0.702. The stop-loss order should be placed below the recent low at $0.673, while the target price could be set at the resistance level of $0.805. This strategy capitalizes on the potential for a bounce from the support level while mitigating risk by placing a stop-loss order below the recent low. Based on the provided data, Litecoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price hovering around the support level of $90.1. The forecast data also suggests a continued downward trajectory. The RSI indicator is currently below 50, indicating bearish sentiment. Considering these factors, a short position could be initiated. A suitable entry price would be around $92, with a stop-loss order placed at $93 to limit potential losses. The target price could be set at $85, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline in Litecoin. Based on the provided data, Swaycoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $2.23 on several occasions. The forecast data also suggests a continuation of this downward trend, with prices predicted to remain below $2.3 for the next week. Considering these factors, a short position strategy is recommended. A trader could enter a short position at the market price, which is currently around $2.28. The stop-loss order should be placed at $2.38 above the recent resistance level to limit potential losses. The target price for this trade could be set at $2.15 based on the forecast data and the overall downtrend. This strategy aims to capitalize on the potential for further price decline in SWAY coin. Based on the provided historical and forecast data, APTUS appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding around $5.15. The forecast data suggests this downtrend may continue in the coming week. A position strategy could involve shorting APTUS when the price approaches the resistance level of $5.81. The entry price would be $5.81, with a stop-loss order placed at $5.95 to limit potential losses. The target price would be $5.15, the identified support level. Additionally, we can incorporate RSI and Bollinger Bands into the strategy. Selling when the RSI reaches overbought levels above 80, and buying when it reaches oversold levels below 20, can provide additional signals. The Bollinger Bands can also be used to identify potential price reversals. If the price breaks below the lower Bollinger Band, it could signal a further decline in price. This strategy combines the trend analysis with technical indicators for a more comprehensive approach. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. Support and resistance levels further reinforce this view, with the price consistently finding resistance around 0.206 and strong support at 0.197. Considering these factors, a bearish strategy is recommended. Enter a short position at 0.199, close price on March 20th, with a stop-loss order placed at 0.203, to limit potential losses if the price unexpectedly rallies. The target price for this trade is 0.187, the lowest forecast price, aiming to capitalize on the expected continuation of the downtrend. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The RSI indicator is hovering around neutral levels, indicating a lack of strong momentum in either direction. However, the price is consistently finding support at the $17.5 level, suggesting potential buying pressure. Considering these factors, a potential strategy could involve a long position with an entry price around $17.5, the support level. The stop-loss order should be placed below the recent low, around $16.5, to limit potential losses. The target price could be set at $18.6, the resistance level, aiming for a profit of approximately 6%. This strategy utilizes the support level as a potential entry point and aims to capitalize on a potential bounce back towards the resistance level. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI indicator is hovering below 30, indicating oversold conditions. However, the price action has consistently found support around the $0.21 level, suggesting potential for a short-term bounce. Therefore, a cautious long position could be considered. The entry price should be around $0.206, the predicted low point in the forecast data. A stop-loss order should be placed at $0.200 to limit potential losses. The target price could be set at $0.238, which represents a potential upside of 15% and aligns with the recent support level. This strategy leverages the oversold RSI and potential for a bounce-off support, while mitigating risk with a tight stop-loss. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The support price of $0.115 acts as a potential floor, while the resistance at $0.13 suggests a struggle to break upward. The RSI oscillates around 35, indicating a neutral to slightly bearish sentiment. The Bollinger Bands show a narrowing trend, suggesting a potential for a breakout in either direction. Considering these factors, a short position strategy is recommended. Enter a short position at $0.123, the current market price. Set a stop-loss order at $0.115, the support level, to limit potential losses. Target a profit at $0.106, the lowest predicted price in the forecast data. This strategy leverages the downtrend, the support level as a risk management tool, and the forecast data as a profit target. Based on the provided data, optimism appears to be in a sideways trend with potential for upward movement. The historical price data shows a range between $0.732 and $1.24, with the recent price action hovering around the lower end of this range. The forecast data suggests a slight dip in the coming week, but the overall trend remains uncertain. Considering these factors, a potential strategy could involve a long position with an entry price around $0.832, the current support level. The stop-loss could be set at $0.796, the recent low point, limiting potential losses. The target price could be set at $0.956, the recent high point, for a potential profit of around 15%. Additionally, the RSI indicator suggests that the asset is currently oversold, further supporting a potential bullish move. Based on the provided data, STRK appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The support price at $0.175 provides a potential buying opportunity, while the resistance price at $0.221 indicates a ceiling for upward movement. A buy position could be initiated at the support level of $0.175 with a stop-loss order placed at $0.17 to limit potential losses. The target price for this trade could be set at $0.19, aiming for a 9% gain. This strategy combines the support level with a risk-reward ratio that favors potential profit. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data which predicts further price drops. The RSI indicator, while showing some fluctuations, generally remains below 50, indicating bearish sentiment. The Bollinger Bands also suggest a downtrend, with the price consistently trading below the middle band and approaching the lower band. Therefore, a short position is recommended. Enter a short position at the market price when the price reaches the resistance level of $135. Set a stop-loss order at $138 to limit potential losses. The target price for this trade is $115, based on the support level identified and the downward trend. This strategy combines the signals from the trend analysis, RSI, and Bollinger Bands to maximize the potential for profit while minimizing risk. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the price closing lower each day. The forecast data further supports this bearish outlook, predicting continued price decline for the next week. The support price of $0.491 acts as a potential floor for the price, while the resistance price of $0.795 remains distant. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $0.521, near the recent high. The stop-loss order should be placed above the recent support level, at $0.547, to limit potential losses. The target price could be set at $0.445, aligning with the predicted low point in the forecast data. This strategy leverages the identified downtrend and aims to capitalize on the expected price decline. Based on the provided data, Render appears to be in a downtrend. The historical prices show a consistent decline, with the recent support level at $3.11. The forecast prices also suggest a continuation of this downtrend. Considering the RSI, which is currently hovering around 42.0, it's not significantly oversold. However, the Bollinger Bands indicate a potential for further price decline as the price is currently trading near the lower band. Therefore, a short position could be considered. A suitable entry price for a short position would be around $3.22, the current market price. The stop-loss order should be placed at $3.45, which is the recent resistance level and the high of the last few days. The target price could be set at $2.94, the predicted low for next week based on the forecast data. This strategy leverages the potential for a continued downtrend in render, utilizing both the price action and technical indicators to guide the entry and exit points. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of 0.102. The forecast data also suggests a continued downward movement. Considering this trend and the support level, a short position could be considered. A potential entry price for a short position would be around 0.114, which is slightly above the recent price action. The stop loss could be placed at 0.118 to limit potential losses. The target price could be set at 0.102, aligning with the support level. This strategy utilizes the trend and support level as primary indicators. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is hovering below 50, indicating bearish sentiment, and the price is consistently trading below the 20-day moving average. A long position is not recommended at this time. A more suitable strategy would be to enter a short position when the price reaches 0.176, the recent resistance level turned support. The stop loss should be placed at 0.182, above the recent high, and the target price could be set at 0.15, a significant support level based on the historical data. This strategy capitalizes on the downtrend and utilizes key support and resistance levels to manage risk. Analyzing the provided data, PEPE exhibits a fluctuating trend with recent price movements predominantly within a range. The historical data shows a support level around 0.0000660, indicating potential buying opportunities near this price point. The forecast data suggests a slight downward trend in the coming week. Combining these observations, a strategy based on the RSI indicator could be employed. Enter a long position when the RSI drops to 20, indicating oversold conditions. Set the stop-loss order at 0.0000660, aligning with the established support level. Target the price at 0.0000760, which represents a potential upward breakout from the recent range. This strategy capitalizes on potential price rebounds from oversold levels while managing risk through a defined stop-loss order. Based on the provided data, SHIB appears to be in a slight downtrend. The historical price data shows a gradual decline over the past 2 weeks, with support holding near $0.0000126. The forecast data suggests this downtrend may continue in the coming week. Given this, a short position could be considered. An entry price around $0.0000128 could be initiated, with a stop-loss order placed at $0.0000130 to limit potential losses. The target price could be set at $0.0000124, aligning with the forecast and the support level. This strategy utilizes the price trend and support level to identify a potential selling opportunity. Based on the provided data, the trend for dog with hat appears to be bearish with a possible short-term rebound. The historical data shows a consistent decline in price with a few minor bounces. The forecast data also suggests a continued downward trend. The support level at $0.43 might act as a temporary floor, but the resistance level at $0.551 remains a significant hurdle. Therefore, a potential strategy could be to enter a short position when the price reaches the support level of $0.43. The stop-loss order should be placed at $0.45 to limit potential losses. The target price could be set at $0.40, which is a significant support level based on historical data. This strategy utilizes the support level as an entry point, a reasonable stop-loss, and a target price based on historical price action. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of 0.00196 on multiple occasions. The forecast data also suggests a continuation of this downtrend. Therefore, a short position is recommended. Enter a short position at $0.0024, with a stop-loss order placed at $0.0025. The target price is $0.0020. This strategy utilizes the support level as a potential entry point, with a tight stop-loss to minimize potential losses. The target price is set based on the downtrend and the forecast data. Based on the provided historical and forecast data, NEAR protocol appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $2.52. The forecast for the coming week suggests a continuation of this downtrend. Considering this, a short position could be initiated with an entry price at $2.60. A stop-loss order should be placed at $2.70 to limit potential losses. The target price for this trade could be set at $2.40, aiming to capitalize on the expected price decline. The RSI indicator is currently hovering around 47, indicating that NEAR protocol is not significantly oversold. However, if the price continues to decline and the RSI falls below 20, it would signal an extreme oversold condition, potentially presenting a buying opportunity. Bollinger Bands suggest a narrowing price range, indicating a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout below the lower band could further confirm the bearish outlook and strengthen the short position. Based on the provided data, Internet Computer appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The support price of $5.57 provides a potential floor for the price, while the resistance price of $6.04 acts as a barrier to upward movement. A strategy based on the RSI indicator suggests entering a short position when the RSI falls below 30, which occurred on March 13 at a price of $5.45. The stop-loss order should be placed at $5.66, slightly above the recent high, and the target price could be set at $5.20, based on the support level and the downtrend. Additionally, the Bollinger Bands indicate a potential sell signal as the price is approaching the lower band. This reinforces the short position strategy. Based on the historical and forecast data, Injective appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $9.6 has been holding, but the resistance at $13 remains a significant barrier. Considering these factors, a bearish strategy could be implemented. A potential entry point would be at $9.6, the current support level. A stop-loss order should be placed at $9.7 to limit potential losses. The target price could be set at $8.67, the lowest forecast price for the next week. This strategy leverages the downtrend and potential for further price decline. BTC appears to be in a downtrend based on the historical price data, with a consistent decline from March 6 to March 19. The forecast data for the following week also suggests a continuation of this downtrend. The support price of $240 and the RSI readings, which have been mostly below 50, further indicate a bearish sentiment. Therefore, a short position could be considered. A suitable entry price for a short position would be around $255, based on the recent price action and the anticipated continuation of the downtrend. The stop-loss order should be placed at $262, slightly above the recent resistance level, to limit potential losses. The target price could be set at $230, which aligns with the forecast data and the broader downtrend. This strategy leverages the potential for further price decline in BTC while managing risk through a defined stop-loss order. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping from $1.06 on March 6 to $0.963 on March 19. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below $0.90 for the next week. Considering the RSI, the asset is currently oversold, with a reading of 42.7 on March 19. This indicates potential for a short-term bounce. However, the Bollinger Bands show that the price is trading near the lower band, suggesting limited upside potential. Therefore, a bearish strategy is recommended. A good entry point would be around $0.963, the closing price on March 19. A stop-loss order should be placed at $0.997, the lowest point of the Bollinger Bands on March 19. The target price could be set at $0.864, the support level identified for the period. Based on the historical and forecast data, WorldCoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further decline in the coming week. The support level at $0.834 has been holding, but the resistance level at $0.931 remains strong, indicating a potential for further downward movement. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price reaches $0.872. Set a stop-loss order at $0.898 to limit potential losses. The initial target price is set at $0.799, which aligns with the lowest forecast price for the coming week. As the price continues to decline, consider trailing your stop-loss order up to lock in profits and manage risk. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The support price of $0.136 acts as a potential floor, while the resistance price of $0.176 presents a significant hurdle for upward price action. Considering these factors, a bearish strategy could be employed. A short position could be entered at the market price, with a stop-loss order placed at $0.140 to limit potential losses. The target price could be set at $0.125, aiming to capitalize on the anticipated downtrend. Additionally, the RSI indicator, currently below 40, suggests oversold conditions, potentially indicating a temporary pause in the downward momentum before further decline. The Bollinger Bands, with the price consistently trading below the middle band, further reinforce the bearish outlook. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $0.507 on several occasions. The forecast data also suggests a continuation of this downtrend. RSI indicates potential oversold conditions around the 20 level, while the Bollinger Bands show the price trading close to the lower band, suggesting a potential bounce. A conservative strategy could involve entering a short position at the next price spike above 0.507, with a stop-loss placed at 0.524, the recent high. The target price could be set at 0.465, the lowest forecast price. This strategy utilizes the potential oversold conditions and the Bollinger Bands to identify a potential entry point. It's important to note that this is just one possible strategy, and risk management should always be a priority. Based on the provided data, Polkadot appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, with the support level holding at around $4.43. Looking at the forecast, we anticipate a slight upward correction in the coming week, but the overall trend remains bearish. Therefore, a strategy utilizing the RSI indicator with an oversold level of 20 and an overbought level of 80 suggests a potential entry point around $4.33, the lowest predicted price for the next week. The stop-loss should be placed below the recent support level at $4.29 to minimize potential losses. The target price could be set at $4.55, the highest predicted price for the next week. This strategy leverages the potential for a short-term rebound while acknowledging the overall bearish trend. Based on the provided data, Filecoin appears to be in a slight downtrend. The historical price data shows a general decline, with the price bouncing around the support level of $2.84. The forecast data also suggests a continued downward trajectory. Considering the RSI, it is currently at 50.0, indicating a neutral market sentiment. However, the RSI has been hovering around the oversold level of 20 in recent days, suggesting potential for a rebound. Therefore, a long position could be considered with an entry price around $2.84, the support level. The stop-loss price should be set at $2.78, below the recent lows. The target price could be set at $3.05, aiming for a retracement to the previous resistance level. This strategy utilizes the support level as a potential entry point and the RSI's proximity to oversold levels as a bullish signal. The stop-loss and target prices are determined based on technical analysis and risk management principles. Based on the provided historical and forecast data for Conflux, a potential investment strategy could be implemented. The historical data indicates a downtrend, with the price consistently declining from March 6 to March 19. The forecast data suggests this downtrend may continue, with prices projected to remain relatively low. Therefore, a short position could be considered, aiming to profit from the expected price decline. A potential entry point could be around 0.0877, the price on March 19. A stop-loss order could be placed at 0.0902, the high point on March 19, to limit potential losses. The target price could be set at 0.0797, the projected low point on March 20. This strategy leverages the downtrend and utilizes technical indicators to define entry, stop-loss, and target points. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI is currently below 30, indicating oversold conditions. The price is also trading below the 20-day moving average, confirming the downtrend. Therefore, a short position is recommended. Enter a short position at the current market price of $16.4. Set a stop-loss order at $16.8 to limit potential losses. The initial target price is $14.9, based on the forecast data. If the price breaks below the support level of $16.1, the stop-loss should be moved to $16.1. As the price moves closer to the target price, consider trailing the stop-loss to lock in profits. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend may continue in the coming week. The support price of $18.2 provides a potential floor for the price, while the resistance price of $20 indicates a significant hurdle for upward movement. Considering these factors, a potential strategy could involve short-selling Avalanche. A suitable entry price would be around $18.9, close to the recent resistance level. A stop-loss order could be placed at $19.2, slightly above the entry price to limit potential losses. The target price could be set at $17.3, aligning with the forecast price and the lower end of the Bollinger Bands. This strategy leverages the downtrend and the RSI indicator, which suggests the asset is currently oversold and may continue to decline. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.0268 on several occasions. The forecast data also suggests a continued downward trajectory for the next week. Given this trend, a short position strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $0.028. Set a stop-loss order at $0.0271, which is the highest recent price point. The target price for this trade is $0.0236, based on the forecast data and the support level of $0.0268. This strategy aims to capitalize on the downtrend and profit from the price decline. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling support and resistance levels. The forecast data also suggests a continued downward movement. The RSI indicates that the asset is oversold, but the Bollinger Bands suggest a potential for further downward movement as the price is currently close to the lower band. Therefore, a short position is recommended. Enter a short position at the current market price of $2.39. Set a stop-loss order at $2.41 to limit potential losses. The target price for this trade is $2.20, based on the forecast data and the downtrend. This strategy combines the oversold RSI signal with the potential for further downward movement indicated by the Bollinger Bands. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below both the support and resistance levels. The forecast data also suggests a continuation of this downtrend. Therefore, a bearish strategy is recommended. A suitable entry price for a short position would be around $0.280, with a stop-loss order placed at $0.290 to limit potential losses. The target price could be set at $0.265, aiming to capitalize on the expected price decline. This strategy leverages the downtrend, support and resistance levels, and the RSI indicator, which suggests the asset is oversold and potentially primed for further downward movement. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is also below 50, suggesting bearish momentum. A potential entry point could be around the support level of 0.257. The stop-loss order should be placed below the support level at 0.250 to minimize potential losses. The target price could be set at 0.240, based on the forecast data and the overall downtrend. An RSI-based strategy could also be employed. A buy signal could be generated when the RSI falls below 20, indicating an oversold condition. In this case, the entry price would be around the oversold level of 20. The stop-loss would be placed below the recent lows, and the target price would be determined based on the expected price rebound from the oversold level. However, the Bollinger Bands indicate that the price is currently trading within the lower band, suggesting that further downside is possible. Therefore, a cautious approach is recommended, and the RSI strategy should be used in conjunction with the overall trend analysis. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.0872 on several occasions. The forecast data also suggests a continuation of this downtrend in the upcoming week. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $0.091, the current price level. The stop-loss order should be placed at $0.094, slightly above the recent resistance level. The target price for this trade could be set at $0.085, based on the support level identified in the historical data. This strategy aims to capitalize on the anticipated continuation of the downtrend in ENG coin. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, while showing some fluctuations, remains below 50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a further price decline. Therefore, a bearish strategy is recommended. A suitable entry point would be at the support level of $6.02, with a stop-loss order placed slightly above the recent high at $6.38. The target price should be set at the next significant support level, which could be around $5.50 based on the historical data and the downward trend. This strategy capitalizes on the bearish momentum and aims to profit from the potential further decline in Uniswap price. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling RSI and the Bollinger Bands narrowing, indicating decreasing volatility. The forecast data also suggests a continuation of this downtrend. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price reaches the resistance level of $18.3. Set a stop-loss order at $18.8 to limit potential losses. Aim for a target price of $12, which is the lower bound of the Bollinger Bands and aligns with the anticipated continuation of the downtrend. Additionally, consider using the RSI indicator as a confirmation signal. Enter the short position when the RSI falls below 40, suggesting oversold conditions and increasing the likelihood of a price reversal. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $208 to $169. The forecast data also suggests a continuation of this downtrend, with prices projected to remain below $170 for the next week. Considering the RSI levels, which have been hovering around the neutral zone, and the Bollinger Bands, which show narrowing price action indicating potential volatility, a short position strategy might be considered. A suitable entry point could be around $169, the current price level. A stop-loss order should be placed at $175, above the recent swing high, to limit potential losses. The target price could be set at $160, based on the historical support level and the forecast price projections. This strategy aims to capitalize on the potential continuation of the downtrend while managing risk through a defined stop-loss order. Based on the provided data, a potential position strategy for EOS could involve a long entry. The historical price data shows a downtrend from March 6 to March 19, with a significant drop on March 12. However, the price rebounded slightly towards the end of the period. The forecast data indicates a potential continuation of the upward trend, with prices expected to rise throughout the week of March 20. RSI data suggests EOS might be oversold in the current period, with values below 40. A long position could be entered around the support level of 0.477, with a stop-loss placed at 0.465 to limit potential losses. The target price could be set at 0.579, the resistance level, aiming for a potential profit of approximately 21%. This strategy combines the potential for a rebound based on the RSI and the upward forecast with a risk management approach through a defined stop-loss. Based on the provided data, Tron appears to be in a downtrend with a potential for further decline. The historical price data shows a consistent downward movement, and the forecast data suggests a continuation of this trend. The support and resistance levels also indicate a bearish bias, with the resistance level at 0.244 consistently holding strong. Therefore, a bearish strategy is recommended. Enter a short position at the market price around 0.23. Set a stop-loss order at 0.235 to limit potential losses. The target price for this trade is 0.21, based on the support level and the downtrend. This strategy utilizes the bearish trend, the support level, and the stop-loss order to manage risk and potentially achieve a profit. Based on the provided historical and forecast data for Suncoin, a potential strategy emerges. The price has shown a downtrend over the past 2 weeks, with a significant drop around March 12. The forecast suggests this downtrend might continue in the coming week. Therefore, a short position could be considered. An optimal entry point would be around 0.0168, close to the recent resistance level. The stop-loss order should be placed at 0.0174, above the recent high and the previous support level. The target price could be set at 0.0154, based on the recent support level and the downtrend projection. This strategy combines the trend analysis with technical support and resistance levels.